Hello, good afternoon. You've tuned into Your Stocks, coming live from the CNBC-TV18 Motilal Oswal studios. I'm Vinny Motiwala. Thank you so much, as always, for tuning in. In terms of the market, again, today has been a day where we're seeing a fall coming in for the Nifty. This full week, we've seen the Nifty actually in the red. Today also, we are seeing sharper cuts coming in. It's below 25,700 as of now, the Nifty 50, 25,682 to be precise. Down almost 200 points in the trading session. Trading at the day's lowest point is what the Nifty 50 is doing right now. Look at the broader end of the market. That too is seeing a decline. Mid-cap is down 5 to 0.6% in the trading session as of now. That's also the day's lowest point. And the Nifty small cap, that's seeing a sharper cut coming in. It's down 1.4%. So clear pressure is coming in on the small cap space. And the advanced decline ratio, look at that. That is clearly in the favor of declines versus advances. Yesterday also we had seen them in the favor of declines. They tried making that crisscross, but that clearly didn't happen. And a wide gap between the advances and declines. More than 2,200 stocks on the decline side is what we're seeing as of now. IT, that's the one that's managing to hold on to some bit of a gain in the trading session today. So let's watch out for that. And PSU banks, that's where some bit of a green spot is coming in as of now in the trading session. But apart from that, everything is trading in the red. But let's get started with all your stock related queries. And to do just that, we have our experts for today, independent market expert Shahina Mukadam, as well as Chheda of Nirmal Securities, joining us to answer all those queries. Shahina as well as Nirav, good afternoon. Thank you so much as always for joining in. Nirav, great to have you on the show as well. Let me start with a technical check in terms of the market as well. Today we're below the 25,700 levels. What should we watch out for if we close at these levels, which we're seeing currently?
Yeah, hi Vinny, thank you for having me. Good to be back. See, from a Bank Nifty perspective, no doubt some important support levels have been broken. But very importantly, the data is suggesting at a possible reversal. The nearest support for Nifty on the futures is around 25,620. I believe one can look to buy Nifty at current levels, and on some declines you can keep a stop loss of 25,600 for longs and expect a reversal up to the 26,000 odd levels in the next couple of days. Believe some good buying will come in over a period of time now. From next week onwards, probably in the second half as well. Even for Bank Nifty actually, if you see vis-a-vis the Nifty, it is still outperforming. In fact, it is near its all-time highs, only about 1,000 point down. But definitely believe Bank Nifty will continue to outperform going forward. Very good support area for Bank Nifty is around the 59,200 levels on the spot. Expect some reversal from current levels. A lot of stocks are showing, short covering action over a period of time. There's very less open interest in some of the banks. That does tell us they are under-owned, and follow-up selling is unlikely in some of these banks. So definitely go ahead and buy Bank Nifty at current levels on the futures as well. Also on dips, your stop loss would be around 59,000. Expect 60,200 to come in.
Sure. Okay, thanks for that, Nirav. But let's get started with the stock-related queries then. The first query for today coming in from Nandini, who's writing to us from Chennai. She's holding 50 shares of Bata India. Price is 1,420 rupees a share. Wants to know whether she should look to average at current levels, because currently it's at 920. Considering obviously the stock has not done anything since the last 2 years. Shahina, good afternoon. What's your view for Bata India?
Good afternoon, Vinny. Good afternoon, everybody. Bata India, see, the stock has been coming off, like it's a one-way down last 5 years. But even at current levels, valuations are not attractive. And if you see the last first half performance, the margins have taken a big hit. Yes, there is expectation that the second half may be better because of the GST cut that the government has given for products below 2,500, which most of Bata's products fall under. But at the same time, I would not suggest averaging or adding at current levels.
Okay, you wouldn't suggest averaging or adding at current levels. Nirav, what's your view for Bata India? Would you suggest averaging as an option, sell, or just continue to hold?
See, in terms of Bata India, as Shahina said, 5 years of underperformance. But the silver lining is on the chart looks like it is making a bottom kind of a formation, and probably it can come down towards the 850, 860 odd zone, which is a very good support area. But there's also a demand zone. I definitely believe there is positive divergence on the longer term RSI, and there should be some reversal which can come in probably later off in this month or probably the next one, and from there it can go up towards 1200, 1250 odd levels. So in terms of averaging, I believe this seems to be a right level to average, and probably as it goes lower up to the 860 odd zone, your stop loss should be 840.
Okay. Surely we'll keep an eye out on those levels over there. Let's move on then to the next query. Kishore is writing to us from Pune. He's holding 8,000 shares of Sri Renuka Sugar. Price is 40 rupees per share. Now it's at 25. Wants to know if there's any chance to reach the value at which it is purchased at, or should he average or just book out his losses? Shahina, what's your view coming in on Sri Renuka Sugar? Because a lot of, the news flows that come in from the government side do impact all these companies as well. Sri Renuka Sugar, what's your view here?
Yes, Vinny, and one of the news flow from the government, which I'm looking forward to, which may come and give a positive boost to the stock, is the increase in price of ethanol, which is there on the cards. And if it comes, yes, it will be positive for Sri Renuka because they are the largest distilleries in India. The other positive is that the parent company Wilmar owns 62%, and it's a global company. It has got good trading of agri products across the world. Having said that, these are only all the positives that are there. The negatives are much higher actually, in my view. Also there, that they are making huge losses. We saw in the last quarter first how big losses, which has actually wiped out the net worth. So, and the debt is high. So this makes it a very risky stock. So I would classify it as a high risk stock. There is some movement coming up. It's a small, small cap, some movement. But if you're looking to average, then you have to keep a very strong stop loss. And I wouldn't suggest averaging for this risky stock, but it's up to the investor.
Okay, wouldn't suggest averaging for this stock. Nirav, what's your view for Sri Renuka Sugar? Average sell? What should the viewer do?
See, I am holding a different view here. See, I am looking at the technical charts. There was Renuka Sugar, which was before 2021, and then there's something which is after 2021. The volumes have changed a lot in the last 4 or 5 years. You've seen tremendous amount of volumes which have gone in. No doubt, the stock went up from 6 to about 66 odd, and then it has come down again. But it is at a very good demand zone, which is around the 25, 22 odd zone, and also volumes have picked up again after a brief lull. So I believe this seems to be a good time to add the stock, but again from a near to medium term perspective, which I believe this stock can move from here to about 36 to 40 odd zones. So you can average some shares here and book out when 36 odd levels come in. You can keep a stop loss of about 22 for your longs.
Okay, can keep a stop loss of 22. 36 levels is around maybe what one could watch out for in the short to medium term. Different views coming in on the technical as well as the fundamental point of view. Hope that answers your query there. Let's move on then to the next query. We have Shankar, who's writing to us from Bangalore. He's holding 100 shares of Tata Capital. Price is 360 rupees per share. Wants to know if he should continue to hold or sell Tata Capital. Bought it at the levels at currently which it's trading at. Shahina, your view on this one?
Yeah, it is close to the IPO price also. And valuations, in my view, are not expensive if you compare it to the peers. Tata Sons, of course, holds 85% equity. So you could see some more offering coming from there over the medium to longer term. But at the same time, given the funds that they have raised, I would say that there is upside from here. And in terms of actual balance sheet performance, it has taken some bit of a hit because of the merger from Tata Motors subsidiary, the finance company. But I would believe that over the next 1 to 2 years, that also could improve. So I would say it's a long-term investment stock that you can hold.
Okay, long-term investment stock that you can continue to hold. Nirav, I know not much in terms of charts because obviously it's fairly recent in terms of a listing. But the viewer wants to know any sell target. Is that possible to give or suggest for them?
Yeah. So, whatever chart it is, there was a brief consolidation, and there was a breakout above that 335, 340 odd zones. And, according to this breakout, the target is coming out toward the 390, 395 odd zone. So, from a near-term point of view, another 10% is what the stock can move up to. I believe, again, I agree with China. This stock can go up from here, a very good pattern at this point of time, so definitely worth holding. And if it comes down, add some stock around 345. You can keep a stop loss of 340.
Okay. Thanks so much for that. So long-term view, it's a better story, though Nirav has given you some of these target prices that you could keep as well. But on that note, we're going to actually step into a very short break. But here's a quick note for our viewers. Get ready for CNBC TV18's all-new lineup starting today. Incisive analysis, sharp commentary with CNBC TV18's brand new offering. Watch our new segment, Cut the Balance Sheet, with Mangalam and Sonal Bhutra, as well as watch Macro Signals with Ritu Singh, that isolates the macro forces that actually matter for the day. And finally, stay ahead of the curve with CNBC TV18's most trusted in-house technical experts. Welcome back to Your Stocks on CNBC TV18. We still have with us our experts for today, Shahina Mukadam as well as Nirav, Chheda, to answer all your stock-related doubts. Next query for today is coming from Ganesh, who's writing to us from Bangalore. It's a more of an investment query. He wants to know if he can accumulate SBI, Maruti Suzuki as well as HDFC Bank, three stocks he's looking at for the long term for more than 5 years. Shahina, your view?
We don't have his full portfolio. So if these are the only three stocks that he's going to be looking to add, I would suggest instead of adding two banks like SBI and HDFC Bank, take one of them. Let us assume I would prefer an SBI as of today for let's say the next 2 to 3 years. But even HDFC Bank, if you're choosing that, is a good stock to hold in your portfolio. SBI, because valuations are very attractive, in terms of price to book, in terms of their net return ratios, those are very attractive. NPA is also pretty low, the net NPAs. Now, in terms of Maruti also, I believe they are becoming pretty aggressive in their EV launches. And if you look at a 5 year, if you're a long-term investor, 5 year, they're planning to double their capacity. So I would say Maruti, while slightly expensive in terms of valuation, you can add it at dips and hold it in your long-term portfolio. And I would say that, so now the third stock, if he's got to add, I would say add something in metals. So here I would suggest something like a Hindustan Copper, where while we have seen some bit dip in copper prices, the LME prices, but at the same time, I think if you're looking at a 3 to 5 year horizon, that could be one more stock that you could add to your portfolio. So you have a mix of different sectors.
Yes, absolutely. This is if, this is the only ones he's holding. But yes, Shahina has given her suggestions. A mix of portfolio in your portfolio also makes it better as well. Nirav, your view on any of the names, SBI, Maruti Suzuki and HDFC, all this for the long term?
See, on the charts, if you see, from a long-term perspective, I also hold the same view that, two banks shouldn't be in the same portfolio. As of now, the chart of SBI seems better. It is well placed and, above a breakout level while HDFC is consolidating. So there is good chance that SBI will move up from here, from a 2 to 5 year perspective. So you can accumulate that. And Maruti looks like, it's at the higher end. So don't buy everything, at one go. Probably start from today and, in the next few, months. Whenever it comes down, add more. So from a 5 year perspective, I like SBI and Maruti.
Okay, SBI and Maruti, that's a view there coming in even from Nirav. Let's move on then to the next query. We have Rekha who's writing to us from Riyadh, and she wants to know if it's the right time to buy shares of VST Industries and hold it for a time period of 2 to 3 years. She is also already holding 300 shares of ITC at a price of 209. ITC Hotels, I beg your pardon. Yes, ITC Hotels is what she's holding at 209. Wants to know if she can add more of these shares, 700 more of the shares of ITC Hotel. Shahina, your view.
See, now VST and VST Industries and ITC are the same classification of sector. They both are in cigarettes. So, adding VST if you're already holding ITC doesn't make any sense. even if you look at pure cigarette valuations for both of them, I think while VST looks optically cheaper, I think if you just take the cigarette valuations of both of them, they both
Right.
are on similar.
Shahina, she's asked on ITC hotels, huh? Not ITC. It's ITC hotels. VST Industries and ITC hotels now she's talking
Yeah.
about.
Yeah, so VST Industries, I wouldn't suggest to add.
Okay.
Okay. And or a switch from ITC. I would prefer ITC over VST.
Okay.
And ITC hotels, yes, if you want to see at current levels, selling ITC and getting into ITC hotels, I don't think makes too much sense. But I personally am invested in all of them. So I am, so I would say that yes, ITC hotels is also good. You know, they're expanding 13,000 room keys, which is going to, go up further. But and they are also have got very aggressive plans. But as of now, I would continue holding ITC because all the negative news has seen the stock correct such a lot. You could look to add ITC hotels, no issues if you've got surplus funds.
Okay, can look to add ITC hotels if you've got surplus funds. So that was also their doubt that should they add more ITC hotels, then you could look to add that as well. But VST Industries, Shahina is saying avoid. Nirav, your view, VST Industries, ITC hotels on the charts.
VST Industries has been consolidating in the same range from the last 6-7 years, from 2017 in fact. Only once there was a range breakout and then again it came within the range. So I don't think one should be buying this stock at this point of time. Don't see much upside coming in here very quickly as well. Whereas ITC hotels, yes, after a brief upside, this has started to come down in the last 6 months or so, but it is coming to a very strong support zone of around 180 to 185 odd levels. Once it comes there, that is when you add more stocks at this at that point of time, and post that I believe this can go up to us to 25 to 30 odd levels, probably even higher, but that's a resistance zone. So yes, ITC hotels you can add at lower levels, but VST Industries I would say avoid.
Okay, VST Industries avoid, ITC hotels can look to add. The Nirav has mentioned the levels over there as well. Next query, Mukundan is writing to us from Ooty. He's saying that his wife is holding 1,227 shares of BSC. Average price is 64 rupees per share, and he's holding 378 shares of BSC, and this is at a price of 372. So they are very, very long-term investors, clearly getting the benefit of long-term investing here. Should they continue to hold or book profit, Shahina?
Not really very long-term investors. Vinny, in 2021, 22, I had given this as my Diwali pick in a lot of channels, and I also personally had bought it at that time. So the average price that he has given is just over a four odd year or maybe at best 5-year period. So valuations currently are a little bit on the higher side. I would say not little bit, it is expensive, but I would still say continue to hold because we saw the first half, the numbers we had expected some bit of impact on the change in date of the expiry. But we did not see any impact of it. The profits are doubling on a 50% revenue increase. So I would say it would take 2 years, maybe 2-3 years for the valuations to start looking interesting, attractive. You have NSE also that is on the cards to list on the next 1 year. So I would say hold unless you need the money. There's no point in switching.
Point in switching there. Okay, and Nirav, what's your view for this one?
See, there is on the chart, as you've already discussed, this stock has really come up from 30 odd levels to about 3,000. But now there are signs of exhaustion on the charts. There's a negative divergence on the longer term chart as well. So I would believe that one can, look to book some, 20-25% profit at current levels. But other than that, this might take another 6 to 8 months of consolidation. Once it comes to 2000, that is when you start to add again. But as of now, book some profits.
As of now, book some profits. Okay, next query, we have Balakrishna, who's writing to us from Udupi, holding 680 shares of sale. Price is 125 rupees per share. Shahina, what should they be doing with sale?
Here again in metals, I would prefer the non-ferrous over ferrous. Okay. So I would say sale, while in terms of pure valuation, 1 year down the line, it's about 7-8 times EV to EBITDA. So it is not too expensive. But I would see the period of consolidation in current levels, time-wise stock correction to be there. Because if you saw the numbers, like, they are being impacted. They were impacted in the first half by a huge dip in the steel prices. The government has imposed, has given them the leeway of some. They have got, I think, support prices support duty that has been introduced, which is supporting a price increase in steel, domestic steel, which next year FY27 could see an improvement. So I would
Okay.
say, I would still prefer Hindustan Copper over a sale.
Still prefer an Hindustan Copper over a sale. That's a word there. But that was the last query for today. Shahina as well as Nirav, thank you so much for joining in and helping our viewers solve all those doubts that they have sent. Thanks so much for that. And viewers, before we just wind down, we have some update that's coming from Reuters. Sources saying that RBI has raised some objections to Bain Capital's plan to acquire a controlling stake in Manappuram Finance, and Bain Capital was actually exploring phased divestment in India's Tiger Capital to address the concerns of the Manappuram deal. But let's keep an eye on that. As of now, the stock is down 6% in trade. But with that, we'll wind down this edition of Your Stocks. Thank you so much for tuning in. Up next, you have Closing Bell to take you through the last hour of trade.